All right, guys, just real quickly here, I wanted to go through some charts. We've got a lot of consolidation and things happening right now, so I think it's important to get some idea of some bigger picture. So, starting with SPY here, you can see I've got some trend lines on this chart that sort of give us the idea of upward movement. And it's pretty clear here that anything that sort of ends up below, right now about 405, but definitely 400 could definitely drift lower down to the daily 200, which is down here in the 370s. So I think that all of these lines are important. One thing that's important about these is you've got these upward channels that you can see, and price is respecting them pretty well. You can see, especially here in this little congestion area right here, that we spent quite a bit of time in. SPY was pretty much in that area, and you can see that continues forward. Below that, we've got some some downward pressure pushing prices down that it popped back inside of this area, this channel right here, and you can see that maintains. So that happened well, you go back to September, and then in January, and then in February, March, it happened again, and here we are in May, and it's happening again. We're just in this channel. This is very much I want to say a bearish fake out, because you see where prices were pushed below the daily 20 and it seemed like they could go further, but they didn't. They held the daily 50 here, and that's what we saw here last week as well. So this area is not an area to go short. This is an area that price should come back out of and move back into these upper channels. We're seeing this higher channel here where SPY spent about a month going sideways in this upward channel above the 20 MA. As price got ahead of the 20, it kind of went sideways, and you can see we've dipped down below, but I don't think that this is bearish at all. I think that it could, much like it did in prior times, it could spend quite a bit of time in this channel, which will just give us some choppy action, which can be frustrating. To kind of draw a zone on it, we've kind of got this area here that is more or less going to be chop, and so we need to be aware of that price can bounce around in this area for quite some time. Now, if we look at some other names, let's start with Microsoft. Pretty obvious pattern here on Microsoft with what it's been doing. It broke higher here after earnings out of this consolidation. And you can kind of see, let's even go on the weekly here. You can kind of see with Microsoft, it tends to consolidate and have large breakouts and then consolidate. And so that's kind of what we're seeing. On the weekly chart, it looks pretty healthy, though. We have maintained the weekly 20-period moving average. So everything is kind of in line there. We go back to the daily, and what we're looking at is just a pattern of, we had a breakout from earnings here, breakout running up to, and it continued the breakout after. Then we had this period of consolidation, and this again is kind of the same thing. And you can see that it stayed in this consolidation area for quite some time. And then it broke out again, and it did pretty much the exact same pattern there. And then it stayed in this consolidation area. So we've got another consolidation area here with Microsoft that it could just hang out in for a while. But you can see value is building higher as it does this. So that's a bullish sign, but it may mean that we don't get very many breakouts on that for right now. If we look at the swing trade that we did on Microsoft, we did do a butterfly for this week looking for 255. So if Microsoft does break out of this, then we're kind of aiming up here, and that's a very reasonable target. It's again, with butterflies, this is a 57-cent butterfly. It's not a big cost. We need to use butterflies for their leverage of expansion. The $57 that you spend on that should be very low as far as risk management goes. The upside potential on that's pretty high. Let's look at Apple, and you can see Apple has a very similar kind of, let's blanket this out, very similar kind of just consolidation pattern. It broke out here leading up last summer, coming out of the pandemic drop, if you will, and it maintained a pretty bullish pattern. Now it broke down again here, kind of at the same time as Microsoft, broke back up again, kind of the same time as Microsoft. And now we're in this consolidation area again. And if Microsoft can get Apple can get above 128, then we can break out again, and we should probably look for a similar pattern as this. But I think this can really go sideways for a while. It's not bearish. The 20 period moving average on the daily, you can see we've had this pattern right here where price attempted to go up. In fact, we got the same candlestick pattern here. Price attempted to go up, and it came back down, but it really just went sideways for a little while. And so we need to look for some patterns that we can trade out of this. We don't have anything just yet. If you look at something here, we had a tradable trend line there on Apple. Once it broke that, it was a nice solid play. So we need to look at the chart for something like that. Wait for a decent setup. I mean, we've kind of got right now, we kind of have a trend line here, but there's only 2 points on that. It's not anything really convincing. So I think we need to wait a little bit. Price can go sideways, and I'm seeing a lot of charts that look like price can go sideways. Now, Facebook did have a little bit of a breakout long based on this trend line here, and it's kind of trending sideways. So Facebook is more bullish than the rest of tech, it looks like. You can see that Facebook has its own consolidation periods like it did here, and price just kind of trended sideways. So it's and here as well. So it's not to say that Facebook is going to break out while everything else doesn't. Facebook is going to need the rest of tech to kind of come along with it, even though it can lead tech in a lot of respects. You can see that this chart looks much more continuing bullish than Apple or Microsoft. So we just kind of have to keep that in mind. Let's see, the last couple that we'll look at here on our charts. Let's pick a couple of good ones. We've got Amazon. So Amazon definitely looks a little bit weaker than the rest of tech. As much weight as it has, that's something to note. So while the other ones may want to go higher, we may have Amazon dragging it down. So just keep an eye on it. We've got a lower trend line there that it seems to be holding, which is a nice upward pattern. So we may see some consolidation continue right in this area until something breaks higher. So just kind of got to keep that in mind. These consolidation patterns can just be areas of sideways action. You can see we had quite a bit of it here on Amazon, and price just kind of went sideways before breaking higher. So keep these patterns in mind. Let's look at one more. Let's look at Google. Google looking more bullish than most of the others, and Google again with its high weight is pretty good. But you can see Google definitely has a period of long periods of consolidation where it just really goes sideways for a long period of time before breaking out. And earnings are the big driver. One of the reasons that earnings is a big driver on Google is because they don't announce forward guidance. So when earnings come out, it's more of a surprise than most. But overall still bullish. See, it's holding above prior consolidation area. That's, in fact, it's got a little bit of a gap there, which is something to note. So, but this is a very, very bullish chart on Google. It's just going sideways for the moment. And let's look at QQQ while we're on here. QQQ looks very similar, of course. It looks actually very similar to Microsoft. Let's pull Microsoft back up. And of course, the markets are opening here, so my Thinkorswim is going to slow down. But QQQ looking very similar to Microsoft there. So we've got some consolidation right now that's going to bring it kind of sideways for the moment. So anyways, that's kind of the quick chart rundown. Keep these in mind. Keep watching these, because once this consolidation breaks out, it's going to be very good indeed for, let's just pull up trading view. Very good indeed for the rest of the market. Now you see QQQ opening here right at the daily 20 MA right there. And so this looks like it's going to continue to be resistance and keep QQQ in a consolidation area. Once this breaks, you can see we broke down below the 20 here, and we've stayed below it for quite a period of time. So breaking above it would be very bullish, but we're going to need a lot of things to happen. We're going to need Microsoft to push. We're going to need Apple to push. You can see Microsoft opening right there just below its daily 20. Apple quite a ways below the daily 20. We're going to need these names to catch up and push above those. So, and let's look at SPY this morning opening up above its daily 20. We can look for that to be some support if it pulls back, but SPY's got to get above 418 here. It's got to get above this consolidation area right here, and really above 420 because of our trend line. So keep an eye on that stuff, guys. Good trading this week. Look forward to making some money. And with sideways action, we may be doing more credit spreads and things like that until SPY and the rest of the market can kind of break above its consolidation areas. It's probably not good to do a lot of directional trades. We can just, hang on to the trades that work better in a sideways market like we have seemingly right now. All right, guys, have a good week.